Hello, Warriors. A funny thing happened on the way to the Fed with a double taper. The dollar reversed. Okay, so that was something that talked about yesterday on the video, potential reversal in the dollar, the yen, and I do believe there's follow through for maybe another week or so. Maybe we'll see 95. Still my contention, this is not the high, but we're going to finish some type of possibly wave 4 and then get one more rally. But right now, most to the downside in the dollar. We had that reversal in silver with pretty good follow through today. But what I want to discuss with our guest today, Patrick Karim of Bad Charts One, has some of the most outstanding work long-term in silver. And I want to talk about silver, not just because there was a reversal day and we're getting follow through, as well as a reversal day in gold and we're getting follow through. But if you want a bull market in silver, you have to pay attention to the XAU and XAG gold silver ratio. And this is important because if we start closing back under 80, the game could be back on. And as you can see, we had some nice divergences going into the Fed and a nice reversal day, but look at what it came off of. And Patrick, I'm not sure if you noticed it, but on the weekly chart, we came right off a 200-week moving average. I mean, to the pip. So you have a frame of reference. I'll say now, if we take out close above yesterday's highs, then we, like we were talking about earlier in the week, then we're going to have some type of liquidation break and risk off happening during that. So I'd like to bring in Patrick. Patrick, welcome back to TradeGATEHub. You and I talked, I don't know, we talk every quarter at least, and you were here, I don't know, about 4 or 5 months ago, and we were talking about silver, and you got some great reviews on your interview. And now that these things have happened in silver, and when I was on your show, I thought we'd have one more break, maybe to 19, but yesterday's action seems to be important on the Fed day. What's your take on what happened after the Fed, Patrick?
Well, it's weird how the markets work, because charts, they start set up discounting ahead of time, like all these meetings, right? They go in one direction, but they drift slowly, starting to carve up. The lower lows aren't as low as they are before. The momentum's starting to slow down. So kind of preparing, they're creating, usually we'll see close to FOMC meeting wedges, like, or patterns that, Jesus, like a decision, could happen at that moment. Even the Great British Pound versus the US dollar was already on the monthly chart. We had a great back test of a breakout. Like if you put that on the monthly and you zoom out, you'll see that downtrend, which on the shorter term, it looks like super dire.
Why don't we toss it over to you for sharing? It looks like Trading View is, okay, there's a monthly. So yeah, we pulled back to this pretty important area here, Patrick, and I'm going to stop sharing. And look at that, another monthly moving average. I think that's a 200 month or 50 month, one or the other. It's amazing how these moving averages work, especially some of the longer term ones at inflection points. But I'm going to stop sharing because your charts are much better than mine.
Stop it.
Yours are like artwork.
Pressure.
You're like the Picasso of technical analysis on Twitter.
There's
you and Kevin.
There's a guy that somebody was trolling me. Hold on, somebody was trolling me. He says, Patrick, you're not accurate at all, but your charts, they are pretty. You could do NFTs with them.
Yeah, it's funny. Someone here at TradeGATEHub said that too. I could show you how to mint money from NFTs or whatever they are. So, okay, tell us what we're looking at here. Okay. It's the 10-year.
Yeah, that one, it was just a chart that I was building right now. It's you're seeing like behind the works, like how I'm trying to make sense of all of this there. But this was the 10-year adjusted for PPI. because what's great about PPI is you have data going all the way back, like in the 1940s. So you get to see these meaningful long-term cycles. And
Okay.
yeah, but never mind this one for now. Let's roost our gold to silver ratio chicken there. So I'm going to remove all my drawings, remove all my indicators. What you want to look at the monthly chart with the wicks.
Yeah.
And
so we still have a few weeks left in this month. They're half weeks or 3-4 days, but maybe there still is time for a reversal.
Yeah. So this is key. Like this looked kind of dire. Like just guys, you have to imagine, because the wick, that means the candle, it was all the way up here to close like a Marubozu candle. That looked like a crazy breakout, right? To the upside pull, flag pull. And when you have these type of moves up in conjuncture with a VIX that was shooting up, a DXY that's elevated, that's like you said there, it's a market liquidity event. It's risk off. Everybody gets destroyed, just like we had in the March Madness.
Yes, in the COVID crash.
But now,
this has been a pretty weak rally, Patrick. We have fib-wise, we haven't even retraced 38%. I think we're above 23, but still underneath 38%. If I looked at this and I didn't know the title of the chart, I would go, wow, look how fast it got from 130 to 63. And it's taken almost as much time just for it to bounce like a dead cat that you throw off the roof.
How much I have here? That's not even 38, right? Look at that.
Yeah, not even 38.
And how much did I have here back in? So this was the melt up in silver back in 2011, half off.
Right.
And sorry, no, pretty much here.
That was the melt up in silver.
Yeah, it had a 38% retrace here.
Okay, interesting. I like the way you and Kevin go back and look at history. So many of us, Patrick, get caught up in our 4-hour charts are macro to me sometimes. In fact, I manage positions sometimes from 4-hour charts, because if I look at the 1 hour or 15-minute, I think I'm so good I could get out and get back in. And then I turn my head and I let go of a good position because I have nothing on, because I thought I could catch the next jiggle. So yeah, I think sitting with trades is the toughest thing for most traders. It's something that I've had difficulty with in my career. Only one way to solve it: take partial profits.
Exactly.
And then have your wife lock up your mouse in the wall safe.
It's
or your girlfriend, or you know what? I'll be woke, or your boyfriend.
I'm not gonna comment on that, but I can say that you are, like, I've always, and we're victims of our own emotions constantly. And like people, even drawdowns most of the time, because people are over leveraged, they buy too late in the cycle. It's like, if I mentioned to you about silver, you should really say, oh man, if people are talking about silver, that means a price action went up. The people talking about silver, it's because something previous happened, right? So and then that means it's too late. If somebody, like, it's like people going in Bitcoin, let's say it's 60,000. Well, okay, you're going at 60,000. Are you entering at a low risk where nobody's talking about it, where it's when it was at 9 or 10,000? And even if it goes to like 120,000, okay, that's, so I could double, but where's my risk? Where am I in the rally? Am I stretched away from the moving averages? It's
silver's not too popular right now, Patrick. No. I'm sure, because of your long-term view, that when you're on FinTwit and some of these other social media sites, people want immediate gratification for, 20 baggers. And, it takes a lot of patience. That's what I was talking about. It's one thing to make a great forecast. It's even better to make a good trade, but the toughest thing is a great hold.
Yeah.
Right.
And Yeah. And that's the toughest, because if you're going on Twitter every single day, then your mindset is you're so vulnerable to any. It's like a boxer who goes in the pocket against another boxer. He has more chances of getting hit. Why?
Right.
Like, you should do like Floyd Mayweather, just step back and stay out of range, right? Once you've done your overhand right and you create some damage, why go in and slug it with the guy? Let him come to you, you know?
Yeah.
And trading, people go on Twitter, and then there's a news. Oh no, something
Yeah.
happens, and Elon Musk is dumping Dogecoin, and then you
Yeah.
act on that. That makes
Yeah.
people
It's,
throw out their game plans out the window as soon as their emotions are slightly, and that's because they don't have a good trading framework. You have to have a bona fide trading framework where you believe in it, where you have confidence in it, because when the going gets tough, if you bought based on one guy's tweet, it's game over for you, because you have no emotional capital to offset that, that counter trend rally or something.
what's interesting is there's a lot of bearishness in the precious metals or non-interest. All the arguments, crypto's better, it's more portable, it's finite. What do you need gold for? And gold's not going up because people are buying Bitcoin instead. All of this kind of negative sentiment and narratives in the metals right now, and it's still over 20.
Yeah.
And gold's
Yeah.
still over 1700.
Yeah.
I mean, the kind of sentiment that we have now, you would think silver would be $14 now, instead of 22, 21, and gold would be 1500. And people are as bearish as if price was there, which makes me feel pretty comfortable, as well as the dollar bullishness now, Patrick. And we had a nice little reversal day in the dollar on a double taper. That wasn't the best reaction in the dollar, in my view. I took advantage of it. In fact, yeah. So the dollar is the key, though, for silver, in my opinion. Do you believe it's more about debasement of the currency, or just an inflation hedge?
It's about the inflation adjusted currency. So,
Okay.
because you'll see in I studied this, like you'll see in the 2001 to 2011 rally in the precious metals.
Yeah.
There's segments where gold and silver, they for months there, or even I think closer a year or more, they went up with the DXY. But if you would have overlaid inflation adjusted, then you see that they were actually reacting to a fiat currency that was going up. But if you subtract the inflation from the DXY going up, it was actually going backwards or going sideways. And the gold and silver, they love that. So
okay. So you're a little more agnostic about the dollar. Silver is going to be good regardless of dollar direction. Is that your belief?
Yeah, just if we just off the DXY, generally it kind of fits when you overlay the charts. Okay, look, it kind of tracks it, but it tracks it even more when you inflation adjust it. Because you got to remember that this DXY, right? It's like that basket versus euro, the GPD, but they're all debasing just at different moments, right?
Well, yeah, and I think we are in a different central bank cycle now. Although we doubled the taper, BOE raised rates today.
Yeah, exactly.
So it was almost like we gave the rest of the world, the U.S. Powell gave the rest of the world kind of the green light to go ahead and start tightening, because maybe wants them to have a head start. We're really not tightening. We're just eliminating some QE.
Look, I thought about that this morning, and I said, if let's say inflation is at 8%, 6%, 9%, and the rates they're talking about 1.5 or 1.75 next year, you're still so far behind the curve. What's that about?
Yeah. So what's the orange line on top?
Okay.
That's
okay. This is gold.
Okay.
And here below I have the DXY. So let's say, but like, see the DXY, these huge spikes. This is DXY anomaly. What I'm going to do, I'm going to flip the gold chart, invert scale.
Okay.
So, okay, this is the DXY, and that's the gold chart tracking, not that bad. You see I'm moving it.
Yeah.
But if you
There are
inflation,
times they diverge, is what you're showing. There's a few times, but they pretty much track.
but then if I inflation adjust the DXY, look at that.
Yeah.
Look at that.
Yeah.
It's insane.
It's like 90% correlated there.
Yeah. So if let's say I put on the quarterly chart, and then I add my, sometimes there's a drift, but let's say there's even on the Spearman rank correlation, let's say I add inputs. I want to see how it tracks XAU USD. Okay, not that bad though. There's good periods of
Yeah. It's pretty close.
yeah,
There's
that's
some derivations. So all I could, just think of this, Patrick, that, gold did okay, and a lot of commodity markets did great with what? A stable or strong dollar throughout 2021. What's going to happen if the dollar trend shifts to a weak dollar? That's only going to add more impetus to commodity inflation, because it's going to take more dollars to buy the same thing.
Yeah.
You'll have the nominal inflation happening. So I think we're entering a different stage. This part of the commodity rally happened with a recovering dollar. What's going to happen with a sharply lower dollar now, if that should manifest next year?
Well, I think the gold knows ahead of time. You see how it sniffed it out. This is the gold chart inverse. It's kind of messing with your mind, but you see how it broke down in 2013 ahead, like a year. These are quarterly candles, like a year before the US dollar started inflation adjusted, started outpacing inflation. And here it broke out before like this tumble, right? A quarter before, and then it tumbled. So honestly, we could look at all these inflation stuff, and I get Twitters. People say, "Oh, how come gold's not tracking inflation?" Guys, forget the headline news. Gold, whatever high inflation we got now, gold has pretty much priced it in. And I think the consolidation was either the overshoot of gold having priced in too much inflation versus US dollar strength. But if gold doesn't break back below this neckline here and doesn't go back in a bear market, it's actually telling you, okay, there's actually going to be another wave in 1 quarter, 3 quarters, whenever and you see on the charts, look, they don't lie. These are quarterly. If I draw it these are meaningful breakouts. This is a classic bearish consolidation on the other side of the breakout line, right?
Right.
Man, unless it's a false breakout and goes back within that formation, there's a measured move now downwards. There's going to be so much inflation. Or the DXY is going to be devalued, right? Because this is like man, this is
I know guys that have 50 targets in the Dixie in the next 3 years. 50.
Yeah.
Cut in half. Okay, so I think this is a good segue into looking at some of your longer term to give people perspective, so they're not focused on every 50 cent or $1 move, about the implications of your work longer term. So at least they could consider having some physical and, or buy something that's buy silver, but don't be heavily leveraged because of the potential of what it can do at these levels, and being out of favor maybe in the next month to 6 at the most, be an accumulator of silver. So, okay, here we go.
All right. Well, this is like the big picture chart for
the golden revival.
Yeah, you gotta. If you always, as a chart trader, you always want to try to find fractals, analog moves, because that's proven human emotions interacting with the price. Exuberant selling when the price. I'm just gonna put my Chimoku clouds back on. Exuberant selling versus, and then after that, nobody wants gold. Here was total wasteland. At these, like, gold is a rock.
They called it an archaic relic. I remember I was, I was in the business back then. And early, I turned bullish at 400. What a baton death march it was to 200.
Jesus.
So, they cut it in half, and, I owned some shares, and some of the miners didn't make it through that period. But it's weird how it all changed near the end of going into Y2K, and nothing happened on Y2K, but everything that people were worried about in Y2K happened after Y2K. Anyway, so yeah, I remember those days.
So
I even remember the last major bull market high, Patrick. You're 880 in 1979 when the Russians invaded Afghanistan.
Jesus.
Huh? Hunt Brothers, $50 silver. So show us what's going to make the Hunt Brothers spin in their graves when all they could do is get the market up to 50.
Well, look, I'm not
Tell
going to
us
go down.
what the Reddit traders are going to short squeeze a global commodity to what? How high is high?
I don't, it's not going to be, I don't want, it's not the hunts. It's not the silver squeeze. It's just, it's just capital flows, man. When it's cheap money and you're able to keep borrowing cheap money and keep, how could I, like, doing your stock buybacks or whatever, like the narratives, like, I'm not a pure fundamental guys, but
yeah,
once that shifts, the people that were short all this, they'll have to change unless they want to keep losing money. They'll just change their positions, and then they'll go long. But man, oh man, look at this. This is a 3-year moving average right here. And when you get close to it, to an important inclining 3-year moving average, it's like a magnet. You know, when you put the magnets on the opposite sides, like they push each other.
Yeah.
But if you get too close, it kind of one of the magnets flips, right, and then it sticks. So either this pushes off and we get this type of scenario here where you can't get that close, you can't get that close, and you just have an opposite reaction, right? You're getting really close, but bam, and then you just
it should make it much more convenient. Like I wouldn't like to see a test of the breakout at 1650. That would be too convenient. A lot of people are now talking about 19 is going to be a lock to buy it, right? Are you hearing a lot of that?
Yeah, I even have some charts where, yes, of course, that could be. But there's more. There's support levels that has to go through to go all the way to 19. 19. I thought I had a theory or a roadmap that we could hit 19 on a spike down if we had that gold to silver ratio explode upwards. So if that gold silver ratio didn't hold 80 and we spiked up, I think it would have been possible to dip. But right now,
that may have been an important inflection point in the gold silver ratio yesterday. What great timing to have you on. I mean, one day does not a trend make, but closes back under 80 might look pretty negative.
Exactly. Yeah.
So, here's kind of a medium term target for you.
Yeah. So
heading to new highs over what was that? The 2011 high.
I've had some charts. So when gold, this is what I call a wall. So previous support turn resistance. This is critical. Right. So after that, to digest all this mega top, you need a huge base. So that base is done. We broke out of that base, retested practically the breakout line, all that congestion area here.
Right.
When gold broke out through its wall, because gold went to all-time highs up here. So when it broke out through its wall, it took less than 6 months to overshoot. So when gold went through, let me just pop up gold real fast. XAU USD. So when gold broke out, move drawings.
1350.
Yeah, well, higher. So when gold broke out here through this wall here, so 1575, it took about, so once it broke out here, it took to go all-time highs, it took about 7 months to do to overshoot. So I'm thinking right now, silver's about here. So gold's consolidation was pretty bullish. It stayed close to right under this critical resistance line.
Yeah.
So I'm thinking that silver, and it's look worst case scenario because silver is more volatile and more it's going to go more haywire, more fast. As soon as it closes above 28, I have a countdown that once it gets that I'm gonna add like 6 or 7 months to go to all-time highs.
Okay.
So that's going to be my timeline. Once we get that,
What a great presentation, man. And thanks for sharing that, your targets and your views. And I'm sure that when people see this again and they watch the action in the market, they will want to get a hold of you. And what's the best way for them to do it? Your Twitter handle at BadCharts1, but I also know you have a website. You could show it, Patrick.
man, it'd be my pleasure. They North Star One guys, Bad Charts One on Twitter. Follow me. But me and North Star Charts, Kevin Wadsworth, we have our northstarbadcharts.com. It's our website where we have all our posts, in-depth discussions, stuff that you won't see on Twitter, and then we interact with our members. They ask us questions, they have chart requests, the whole thing, you know. So it's a repository. I think like we have over 16, 17, 1800 charts on that website. So feel free to check that out, guys. It's a great repository of charts to add evidence to whatever research you guys are doing, whatever fundamentals or whatever you like. It's always good to know that you're on the good side of charts, right? You know where the necklines are, where the resistance lines are. Are you buying cheap, expensive? So that's great. Look, that's one that Kevin just did there. Look at the PPI breaking out. This is only the third time in history it's ever done that, Dale. It's insane.
Maybe we live in interesting times and pay $10 for a carton of milk in a few years.
Jesus.
So
that's what I'm paying now in Quebec.
Yeah, I tell you what, Patrick, really appreciate you being here. Great update on what's happening in the precious metal complex, and I really like the chart with showing it with real CPI instead of inflation adjusted CPI was really eye-opening. So good hunting. Happy holidays, buddy.
Thank you, sir. You too.
Yeah.
Enjoy.
I hope the rest of the year winds up and that 2022 is your best year ever in every way.
Great. Thanks.
All right.
Thanks, Dale. I appreciate that.
All right, buddy. All right, everyone. Patrick Karim at Bad Charts 1, and go to his website for some great historical views. Maybe you'll get in the habit of using a telescope instead of a microscope all the time. Adios, buddy.
Ciao, man.
Thank you, everyone. Hope you